Hey y'all, this is Rich with Cross Country Mortgage. Man, this has been one heck of a weekend. Our Friday video didn't go out because we had a challenge with our email program, but I want to go over what has happened in the last couple of days. So on Friday, Friday morning, we were actually warning about Silicon Valley Bank going under, and it happened about an hour and a half after I shot the video. That was just big news. And then over the weekend, the FDIC took over Signature Bank. There are a few other banks that are currently at risk right now. The Fed and the Department of Treasury have stepped in. They have put together a line of credit that is for and introduced new liquidity terms for banks to help forestall more bank failures. This is not like 2008. This is a liquidity crisis backed by good assets. What are these assets? These assets are treasuries and A paper mortgage backed securities. So, what's caused this issue? In short, for example, the 2-year treasury has gone up 3% in 1 year. So, if you're trying to sell a 2-year treasury in an orderly manner, what's happening is you're selling it for 97 cents on the dollar, and you've got billions and billions and billions of dollars that had to be sold by Silicon Valley Bank. So the issue that they had was their customers found that using their deposits was going to be a lot cheaper than borrowing more money. They were needing to use those deposits to make payroll, to pay bills. So Silicon Valley Bank wasn't lending money. They were having to cash out deposits, which is why they had to cash out those treasuries and other longer term uh, debt instruments that they were losing money on. So that's the reason that they went under. So what is happening today? The Fed is going to be meeting. They're going to be meeting in about an hour. We're not exactly certain what they're going to say. They're probably going to say no rate cut. Zero Hedge had a great article this weekend basically saying, hey, Jerome Powell just got the ultimate comeuppance. It's about freaking time. Jerry, what an idiot. Jerome Powell got the ultimate comeuppance because just a couple of days ago, he was telling Congress he could see going up another half a point. What happens? Boom, his monetary policy freaking explodes in his face. My gosh. Well, we've been telling you for weeks, actually months, that this Fed does not have the business acumen to run a lemonade stand. They'd probably even lose money at a garage sale where all their inventory is free and used. Okay, what's going on in the housing market right now? Well, housing, as we look at it, we are still way under inventory. We're seeing sales pick up. We're starting to see bidding wars happening again, but we're seeing inventory in Greater Houston. We're probably at about 1.4 months if you remove all of the pending sales. So it's still really quite the seller's market, but sellers are skittish. They're probably going to be even more skittish now based on what's going on in the economy. So that's what we're seeing. We are seeing a lot more buyer activity. Applications are up. Interest rates today have come way down. But we're not even seeing pricing open. It's so volatile right now. The mortgage-backed securities, we've seen the mortgage-backed securities open this morning down over 100 basis points. They've been fluctuating in that whole time. So there's a lot of uncertainty. We've got the Fed meeting today. There's going to be commentary by Jerome Powell afterwards. I'm going to try to watch that when it comes out and give you guys an update. It'll be on my social media. And then over and above that, we've got CPI and other numbers this week. But I think that our big story right now is the bank failures and what the administration, what the Fed is going to be doing about that. If you got any questions, give me a call, 281-841-1723.